Okay, guys, we're gonna get back out of here. So I'm gonna try and get into happy mode. I apologize. I just hate watching people commit suicide. Like it's like somebody standing at a cliff. Like what? Oh, I remember so distinctly watching Jaws when I was like 6 years old. Be like that, right? The guy's standing on the boat. The shark's gonna eat him. My whole point in all that tonight was breakouts can work, but you manage them properly according to your account size and risk management and the ebb and flow. And to think that you're always going to be green is retarded. It's impossible. And to think that you can hit every ebb and flow of every top and bottom is impossible. Those are fallacies. That's all I'm trying to get at. And some people get so deeply ingrained in that thinking, and then they go down a rabbit hole of fundamentals and then they think that they're using their logic, and they're not. And that's why if you do your research, you'll see that the mental game, it's supposed to be, it's been said that it's more complicated. It's more difficult to win as a trader, to figure out how to get in that pocket as a trader than almost anything. Brain surgery, for example. Now, who knows? But I know it's not easy because I'm 32 years in, and it took me almost a lifetime to figure out that pocket. And it's not like I'm preaching a pocket without the results, right? But the magical part about it is it actually takes 100 hours of work to dig into 2020 alerts and reports to quantify that I'm being straight instead of 10 seconds of a blip on a TV screen or on a Twitter feed. Right? It's not 10 seconds, it's 100 hours. Just to validate it, just to quantify that what I'm saying is real. And then once you figure out, hey, wait a second, this is reality, then the next step should be, let me figure out how to replicate that. Once you get into the pocket, you realize it's actually really simple. Some basic steps. There's something called structures or charts on different time frames, and that allows you to balance something called risk reward in accordance to your account size. And then what you do is you trade the outside edges of the structure, whether it's short or long. And you don't just step up to the bat with one crack. You got to expect to fail on your first at bat. And you have to have a plan for your second at bat. And you got to expect for that to fail. If you fail by the time you're 4 times up to bat, there's something wrong with your methodology. Like the maximum should be 3 cracks. So when you see me, I'll be like 5% long or 10% long or 20% long typically, right? And then if it's 5% long, I'll be like, okay, on my second crack, it's 10. On my third crack, it's 20. Now I'm in 20 plus 10 plus 5 is 35% of the allowable size for that trade, right? So you should take your account and you should split it into 5, 10, 20. Like in my case, it was 70 at one point this year. Pieces, right? Possible trades, bullets. Well, there's more bullets in each right? So possible trades. So let's say your account size allows you for 5. Preferably you want 10, ideally 20. But let's say it's 5. Then you take those 5 and you split them into 4 each. You got to have 20 bullets, minimum. 5 trades with at least 4 bullets in each trade. That's it. Now you spread your risk. You know how to do your entries because I tell you. And as you get into a profit position, you start taking profit. It's that simple. Because I'm providing you the structures. Then the next step is you learn how to chart the structures. And then you just have to keep yourself out of lizard brain hell. Don't allow yourself to get into cognitive dissonance. And trade the discipline structures. Rinse and repeat exactly what I did last year. That's it. Life's changed forever. So I hope that helps. Okay, now we have a bit of a challenge here because Twitter didn't like my, well, it's not just my personal account. They took out my, the Compound Trading Group's corporate feed, and they took out Epic's feed. I can't remember what else. They left alone the private side feeds for the swing alerts and the Epic's alerts. And the public swing they left open for whatever reason. But the funny thing about it is that the Compound Trading feed was just, you know, like CNBC, and like it was nothing. There was no commentary at all. And Epic's feed was all like oilprice.com, like it was oil commentary. But they had, anyway, it's funny. All of our new social is coming out right away. But we're just, you know, we're trying to work it through with Twitter, and it doesn't look like we're ever going to get anywhere with them. They won't even tell us what rule we broke. Anyway, the problem we're having tonight is I can't get a hold of Jen. And she's the one that's got the passwords for all the accounts. She's the only one. We don't share them anywhere or that kind of thing. So I can't even get into the alert feed on this particular monitor, but I can on my personal monitor because it's been, you know, it's signed in kind of thing. So what I'm going to do is, instead of showing you the alert like I normally would, I'm just going to read it out. We're going to look at the charting, and what we're going to do is we're going to just review the alerts, because I see the potential, pardon me, I see real serious significant potential into the 20th of January, well into the end of January, for a significant pullback. So just look at swing report number 2. Now, I did hit the recorder, right? Yeah. So I'm going to walk you through the more recent alerts, just so we can. Oh, and I just got a note about the APDN trade. So let me show you APDN quick. APDN, there's a certain number of these structures or instruments of trade, these stocks, that when they get into it, pardon me, by the way, when they get into a certain zone in the structure, they're like a bank machine, right? And I even put it here, applied DNA, APDN, this bank machine that keeps paying us 2 to 8 times, right? Now, a number of you did message me on Friday and you got this, which is nice. I mean, look at that. It got back into the zone. And that's a perfect example. Like once it gets into this bottom zone, you know, you just 5% long here, oh, it failed. 10% long here, oh, it fails. 20% long at the bottom of the structure. And, you know, that'd be about there, yeah. But it didn't get there, you know, so you might have got 5 plus 10 is 15% size. And you trim at your first resistance, and you trim at your second, you know, and so on. And you use your previous algorithmic trend line, right? Like it might hit 20, but it doesn't matter. You're winning, right? However you manage that. And never expect me to alert every single one of these. It's just not reality with the number of trades we have. And everybody's account sizes are different and stuff. That's not what the alert service should be for. It should be to help you identify, okay, this is setting up, right? And then you got to be able to manage your trade. Pardon me. So, you know, from these bottoms in here, pardon me, oh, I'm struggling, guys. From the fives, you know, it's 2.5 times, just like that. It just keeps paying. You know, it's simple. As soon as it gets in the bottom structure, start, you know, chewing on it, and then boom, it goes. It's a matter of when. You just gotta make sure that you have your entry set if you're not watching every day. I met tonight with a real famous dude, like really famous, and we sat and we talked after curfew. He's a funny dude. Like, this guy's super famous, like world famous, and he just signed some new Netflix documentary contracts that they're doing some follow-up documentaries on them, and so he was, you know, he was really excited to tell me about it, and so he's out after curfew tonight. Right before the webinar. Anyway, what's the point? Oh yeah, he's starting to learn how to trade. Oh, good heavens. So, you know, whatever. I'm gonna be his trading coach in one of the Netflix documentaries. They're coming back to film him for his second documentary right away. But they've got 5 planned. But he's learning how to trade. Anyway, you get the point on APDN. Let's go, pardon me, AXGN from 1170s alert set up near 2 times double now and near trendline resistance. So here's a real good example. AXGN. AXGN. I'm going to be a little slow tonight. Getting back in the groove in the new year. Like, this is, you know, this isn't a beautiful structure, but it's definitely manageable. It wasn't a big hitter, like in terms of, like, this is a weekly, right? This is a very consistent. You know, most traders would not call this a squeeze, but this is. It's not your conventional traditional squeeze, but it is a squeeze because the shorts. What happens is the shorts end up covering right here. I mean, the first covers will be here and then here, right? And you can see how the progression is increasing in pain to the shorts. But anyway, your 200 MA is almost here. And that's the top of the trading box. Like, this is actually a decent structure. It didn't happen as fast as I expected, but, you know, so you should be all but a runner, you know, out here soon if you're not already, you know, for a nice double. The top of the resistance is going to be here in the 25s. And then if it breaks up over your trend line, well, then you got a trend line breakout. So then all you do is you just take your measurement, right? And you can measure, it's arguable, it depends on the equity, but you can measure from here or from here. And you just measure up to where it breaks out and copy and paste your measurements, right? But these horizontals, you know, and this diagonal, pay attention to those more than I would worry about the extensions on the measurements. But the extensions on the measurements can work well too, right? So all you do is you just take, like what I do to get an idea of the measurement is I'll take a triangle and I'll go like this, right? And then I'll go like that. And then clone it. And there's your first. But you don't want to just know where that is. You want to know where your mid is, right? Because your mid is quite typically where it's going to back off in a breakout. So then you take one of these and you do this. you know, and I'm just approximating it. Then on my mids, I always dash them just, you know, because you're busy when you're trading or whatever and distracted. And then I just, you know, get rid of this. And that tells me where my resistance points are. They're all important. And if you are in the breakout, then you can trim a little bit of each kind of thing. But you can expect it, if it does break out of the trend line and it's a bona fide breakout, it'll probably test this and come back and test this. I mean, somewhere at some point in its progression, it's going to test that. And somewhere in its progression, it's going to test this, right? Because the resistance becomes now support until otherwise. And obviously, this diagonal trend line is important. You can see how it's following it. So it's very possible that your new trading structure, and if you study these videos and you study everything that I've done, you'll see this is quite consistent. So then you take this and you just say, okay, this is my new trading structure. It's very likely it's going to trade inside of here, like this. That's the most probable, but you've got to be ready for anything. And that's why you get your size right down at the bottom. And then in terms of what does a structured bottom look like this. So it falls under your key support, it comes back up and then it runs. This is all just fazuli. This is just garbage. That's free money down here. And that anytime you see that structure, right, you know, okay, we're getting ready for a nice run. And if you follow what I'm telling you right now, it'll, if you are not a proficient trader, it will change your life. And this isn't even a great example, but it's an example that works. I guess I should save this while I'm here. I apologize. I don't think my pace is going to increase much tonight. And I'm going to do my best, you know, over the near days and weeks to pick up the pace. And we still got all that work from last year we're trying to finish. And it has to be done soon. So, I mean, we're way late as it is. Okay. Jeez, I just about gave myself a heart attack tonight. I was so pissed off. I don't get like that very often anymore. So that was AXGN from 1170s. Nice little double there. Plug power. I mean, I've been getting questions about it, but so we were long again the 1480s. I think, I can't remember the number that we were long prior to that. Same kind of scenario where, like in Bitcoin, we were long 39s and then we ran it, and then we were long 96s and we ran it. Plug power was the same kind of scenario. Like I might be able to show you here historically. Yeah, see, we were in the bottoms. And we had a price target of $3.48. You know, so we hit it on a few times, cycled it through. But the most recent was this channel. It was just a beautiful trade. And then it broke upside. And then it was a bona fide. You can see how it came back and tested the channel twice and then took off. But I'm getting questions now about, you know, what to do. And as soon as you enter what I'll call fazuli, it just doesn't matter what it is. It doesn't matter. Like it can be, it doesn't matter what your excuse is. You know, Bitcoin's gonna take over the world or whatever. These are messed up, eh? It doesn't matter. It's all fazuli up here. Now, can it break up and leave? It can, but it's like a 1 in 1,000, right? I don't know what it is, maybe 1 in 300 or 200. Like who wants to bank their future? What happened here? Oh, right. Why would you want to bank your future on a 1 in, even if it was a 1 in 50 chance? I mean, look at this is a daily time frame. I mean, this is ideal example. There's your 200 MA. Like, never forget about the 200 MA. That's Earth calling. Right? That's what you call it, reality calling. Is it going to get back to that? And when? I don't know. But I'll tell you, that's reality. I'm not saying reality is price is going to meet it right here. I'm saying it's a reality check. That's your risk, right? It's at $53. Your risk is significant. Does it mean it's not going to go to 8,000? No, I don't. Nobody knows. But you got to manage it, right? So I apologize. But anyway, you need to know the disciplines. And look at this, like it failed even, and then it took off, right? I mean, that'll happen too. So you got to be, you got to use common sense. And we just ran the profit runner on it up and over this, but that's your resistance, now support, right? And look at how close it's getting. Like it's probably going to meet the 50 MA right there. And if the market gets ugly, it's coming down here. 19s. So that's all I can give you on it. I'd love to give you more. And that's, when it gets into Fazuli, you gotta, like normally we'd have a structure on this, more than just this. Like we would have your Fibonacci structure, your quads, we call them. And we could clone them up here, but it's not gonna help. Like, look at that. I was thinking price was back in here, but it's not. It's like, that's just Fazuli. It's just Fazuli gaps. So, all the power to you. Good luck. But get ready for gravity. Great trade, that one. Jeez. Social cap. IPOE. So this is one I'm watching because in crazy, which is what's coming, this is not crazy yet. Crazy's coming. I said everything would run, and I hit that, right? What's next is crazy. And when crazy happens, you want to be ready for crazies. Now, here's an example. The main ones that we follow, S&P, oil, gold, volatility, etc. We want to have those structures so that when there's a big pullback, we can seize the opportunity and go long, right? And we know the structures and our risk rewards. But then there's themes, right? So last year it was a lot of these trend lines, right? These bottom plays, and we were running all those trend line breaks, and we're nailing all those 2 to 8 times and sometimes more. And we're just nailing them one after another because the market has themes. Well, when a market goes into crazy, you notice all the IPOs and whatnot last year, right? Well, all of those are going to be part of the crazy for sure. And this is an example of what I mean. So, when these SPACs and IPOs and whatever else, crazy plays for whatever reason, do this kind of thing, they're going to eventually return to at least 50%, if not a full pullback to whatever trend line or whatever the structure is. And those are going to be ideal for crazy. Because when crazy happens, what's going to happen, you just look at what happened in the Venezuelan stock market, right? People are starving and the stock market's straight up, right? The whole market looks like this. Well, it's not the whole market. And a component of it is going to be these SPACs and these IPOs. And, depending on the share structure, these things could squeeze into, into Pluto if it exists. Can't even tell you how much of this is a lie, but anyway, so you're going to see a lot of these from me. In fact, all of them from last year, I'm getting them ready because I want them all ready for when crazy hits, because it'll hit. And at the end of 2021, you're going to look back and go, the biggest rewards ROI came from what Kurt's talking about right now. You just got to get into the groove and play them right, and I'll show you how. So this particular one, I don't like it enough to say start taking longs at 50%. I'm saying this particular one, and it'll change from each one, wait for this trend line. And the example here is 5%, 10%, and then 20% long. So I'm going through all those IPOs and SPACs from last year. Oil's not having a good night, which is, good for us. Not so good for people that told me I was wrong. So it should bounce here at the double bottom. I just want to see if this actually bounces here. Jeremy was saying that there's some possible buy triggers. 51.86 and 51.68. I just want to see this quick here. Because, oil could collapse, right? The price. What's this here? This is a trend line from day trading last week. Maybe what I'll do is, just so I know, I'll alarm it. 51.68. Oh, I see. Yeah, that makes sense. 51.64. Well, 51.70 or so probably. What does it say? 86. Well, I'll just put an alarm here just so I know it of my own interest. And I'll put one here. Let's see if the software actually executes there. But that software is doing great. 15 short tonight and still holds 10. It gets back into that channel. It'll hold 7 or 8 through that channel. Be a massive win. So SPACs and IPOs, it's going to be a big year. The original opportunity on the SPACs and IPOs isn't the first run. It's the second, third, fourth runs, right? Because it's more structured. It's more manageable. You're not playing roulette. Okay. Future FinTech, FTFT. So this is its weekly spike. Now this one happens to be a bottom dwelling environment, sort of. You got to look into it yourself. I'm just dealing with structure. I think that when this comes back off, especially see this trend line right here, that the probability is pretty high that you're going to end up here at some point because of this here. Because it's already nailed this one. And if you go over, you'll just see this matches up on the other side. It's just a fractal or a mirror. So, if you get entries down in the 2s, 3s kind of thing, and you're selling into the 20s, you did pretty good. So this is what I'm looking for on FTFT. The 9, NCTY, long from 240s, now over at 10 times hit. NCTY. No, I distinctly remember when I took this one, getting messages. I don't mind if you challenge me. I like when you challenge me, but you got to do it within a methodology of trade and not some kind of crazy haphazard lizard brain cognitive dissonance schizophrenic manner. Anyway, I remember being challenged by one of the zombies when I took this trade. How do you like that? You see the bottom structure here, the double bottom that fell out and then it got back in? Well, I took the trade early. It didn't even get above and I took it. I took it down in here because it was so obviously a bottom structure. How do you like that? So it hit 2780 from 240 buys. So now what do? Well, you got a simple trend line here. So your base pattern is there, right? I don't even have to save this. Anybody can do that. But your previous resistance is now support here at 1016. So, you know, if you're a little more aggressive than I am, you would try one here long. But, you know, I don't like I don't like testing fate. You know, so I'll look for the threes. Do it all over again. The kinks, I think it was, back where we started. Here we go around again. Oh, I can play a mean guitar, but I can't sing. Like, I'm the worst. I played professionally for a while. Now, I was never like top shelf guitar player, but I played professionally. You know, I had a lot of fun. NCTY, down in the threes. Take it. Take it home. So that's another bank machine. Now, crude oils looking a little sickly here for these bulls that told me how smart they were this weekend. I'm wondering if the software is going to hit here. I just want to watch the order flow here on my monitors. Yeah, Jeremy just signaled it sold one at 5188. What was the I mean, buy one 5188. I'll get it for you, Jeremy. Oh, he's gonna get it. I think it was 87. Yeah, that's quite quite the way to start the week. It's good. What is it? Oh, hold 9 short. I don't think it'll sell anymore, but it might, or buy anymore. I guess we'll find out. So it holds 9 short at this point. Boy, what a beautiful trade. A little bit of pressure and then boom. Epic nails it. Nice. So we'll see if the bulls can hold the structure. So Epic's holding 9. It will hold at least 7 or 8 for the full downside move. Like into this, I don't know, where it might go down to 7 or 8 size, but it'll go down to 7 or 8 size and then probably here. Then, expect a bounce and a test back up here and then back down. I mean, if it fails, right? If it doesn't fail on that. But it's taking some profit on this nice big hit up in here. Pardon me. Okay. Now that cognitive dissonance in the brains of some people that challenged me this weekend is just getting knocked around hard. See, when I got personal skin in the game, I get a little pissed off when people mess with it too, right? I mean, what people don't understand, like in this whole game of the oil game and our development, is you think you got skin in the game. Right? We've been developing for 5 years. Try that. Tell me about skin in the game. Okay. Where am I? I just about went off on another massive rant, didn't I? The next one we want to take a look at. Okay. TMV, 20-year Treasury bear. Starter swing position. TMV. There you go. Now, we are long 5% size. I can't remember exactly where. 6042 with a PT of 90. I will add 10% at $51 and 20% at $35.55. You see, so that's a great example. I mean, that third crack at bat is almost half of where it is right now, or where it was when I entered. Oh man, oil's starting to really have a bad night. Ooh. There's another buy trigger coming here, so I want to see what happens. Just chatting with Jeremy here quick. Sorry, guys. I got to be on top of it for the coding team while it's happening because we do, little edits along the way, right? And so there's some commentary happening here, and that's just unfortunately, these webinars can get sidetracked a little bit sometimes. But this is a big one for us, so. Okay, so it did cover one at 5172, hold 8 short, and I wouldn't expect it'll cover anymore. I mean, it might cover one somewhere, but it's got position now. It's got really solid position. Like it's gonna just slaughter this trade by the time it's over. I should really go into that trading room, and I'm gonna just go into Discord and on the alert feed really quick just to make sure the traders know. I wouldn't expect Epic to cover much more in the channel structure now that it has key positioning. It's established excellent positioning and will definitely slaughter this trade by the time it's over. It will be a big win. Yeah, it's got really excellent position now. Like the chances of it losing this trade now are next to zero. It's just a matter of how much it wins now. There's a bit of pain on the way up there, but there could be a little more pain yet, but it's got position. So I guess we'll see what happens next. Well, I wouldn't want to be long. Okay. Thanks for giving me that trading education this weekend. I would say exactly what I said was going to happen when I was getting that little education just happened. And I had the timing right too. Don't want to rub it in, but you try it. Okay, TMV. So that 200 on the weekly, that's your target. By the time price meets the 200, it should be at 90 bucks. I don't know if it'll hit, it's like anything. It's just math, right? It's all math. Okay, what's next? Like, I don't want to sound like an egotistical asshole, but at the same time, I'm trying to, find a way to get through, right? I mean, I figure it's better than giving up. Oh, the patient in the ER, let him die. Just let him die. No, I can't do that. It's not my style. Okay. LTRPA. 240 entries, hit 520. Let's take a look at it. Nice little double there. Took a while though, this one. Okay, where are we? So 568, but what's more important, see, this is a tough bottom. This one took a while. It's not clean. It's not your ideal bottom, but, it got so low that how low can it go, Like, I think I'll move this alarm. Just want to find the structure here. Like, I think this fails in here now, but it might not. Anyway, anytime it gets anywhere close to this line, is that measured right? It looks about right. I'm just looking at kind of halfway to the bottom. And it's hard to get, for some reason, these diagonal lines are here. So I'm hoping, oh, I see, off of this structure. So it should be right. So if it gets, if it gets into here, what is that? 806 area? That's pretty key resistance. I'd be careful. So I'm just going to put my alarm up there and relook at it if it gets up there. This is, in my opinion, your key resistance line. Okay, so you can go to the feed and grab the chart. I'm not going to update it. Now, how long have I been? I was so emotionally pissed off that I can't even remember how long I've been in this segment. It's 10:30. Why don't I get this video out and then we'll just continue and I'll get more efficient and happier on the next one. Let's do that just to make sure. They can't be very long is the problem. So I'm going to shut off the recorder. I'll be back in about 20